How do you get started in investing? Welcome everyone to Don't Fear Finance. I do a lot of talking about what you should do when you have already begun investing. But I think that we should first off talk about what you should do before you invest. Investing can be very daunting when you are starting out or beginning to think about investing. There are so many places where you can put your money to let your money grow and multiply. Where do you invest where you want to get short-term profits? Where do you put your money if you want long-term profits? How do you know what investments are best for you? I know it sounds daunting. It feels even scarier because you're putting your money in places for it to grow, and if you mess up, you will lose a lot of money. My best recommendation is to prepare beforehand. Read hundreds of investing books, watch thousands of videos. A lot of these people have gone through ups and downs of investing in financial ruin and success. Before we get into the video, make sure to like and subscribe. Now, into the video. Knowledge is power. This applies to everything in life. I feel that this applies more when you're dealing with money, and especially other people's money, which we won't talk about handling in this video, but we may in future videos. The first thing you do when you're starting in the investment world is to learn as much as you can about investing. The more you know, the more likely it is that you're going to succeed and not heck up. Investing in knowledge is the best thing you can do if you are either too young to invest or you don't have the means to do it. Or maybe you just don't want to lose a lot of money in the beginning on a stupid investment in the markets or a stupid investment in real estate properties. This is a smart idea. It is 10 times better to be over-prepared than under-prepared, as you should always be, and it's pretty obvious that you should, because if you come across a problem in the markets or just in general, then you know how to deal with it, or you have some knowledge of where to get the knowledge from, or you have some basic knowledge into what you should do when it comes up. So where should I get my education from, Don't Fear Finance guy? There are many places to get knowledge from. The first place is, of course, books. Books are incredible because they are compact with the knowledge that someone has gained from years in the workplace and just growing money or gaining experience into a few hundred pages. They let you know the mess ups that people have had, the lessons they've learned from them, and how to avoid them. The next place you can get knowledge from is the internet with online courses and YouTube videos. Information from the internet and online courses are much less reliable because people either don't know what they're talking about or have false information or are lying just for attention and views. I'm not saying that all information from the internet is victim of false information. All I'm saying is that people should fact check sources for whatever they're doing, especially investing. There are a few technicalities that are super important that you get under control before you invest. If you don't do this, then you will be losing a lot of money and profits from your investments. If you lose money in the markets, then you will be even worse off because you haven't figured out and gotten these technicalities in order. So what are these technicalities? The first thing is, of course, bad debt, which in most cases has more interest on it than you get back from the investments and earnings that you make from the markets. This is something that comes up a lot in my rich versus poor inspection videos, as well as my middle class inspection videos. It is how people spend more money than they earn. I don't get why people do this. This is why so many people have so much credit card debt. If you get this habit under control, then you won't have as much compounding credit card debt and debt in general for that matter. Finally, make sure that you are aware of upcoming payments. This could be a wedding or a home purchase. Maybe you're buying a car soon. Make sure you have enough funds to pay for those payments and expenses first, then invest in the markets or any investment. After you complete your research and get your technicalities out of the way, you should choose what type of investments you want to put your money in. Before you make your decision, I'm going to talk about the investments that people are better off investing in if they are new to the markets and investing or just want something simple. Let's start off with the first investment. The first investment is in ETFs, also known as exchange traded funds. An ETF is good for a new investor because they are a collection of investments. The ETF always tracks those investments just like an index fund. They are very good because they track everything from stocks to bonds and commodities. The difference between an ETF and an index fund is that ETFs can be traded throughout the trading day based on the price and value of different stocks and assets that it holds. Index funds do not have that power of being traded. This is a very good investment for new investors because this investment tracks a broader range of assets and investments compared to, of course, stocks. They are also being traded like stocks, but with the same value of some index funds. This gives you a bit of freedom with the types of investments you can trade and buy depending on the day while not having to worry about devastating losses. Yet again, if there are a few increases in the value within the ETF, then there won't be huge spikes in the profits. There are so many ETFs that you can invest in, each of which have different profits, losses, values due to the types of investments they hold. The first one is a bond ETF. They are usually controlled by the government or large corporations. As I've mentioned in earlier videos, bonds have lower profits and gains compared to other investments. The second type of ETFs are industry ETFs. These of course have higher returns and losses than bond ETFs. These ETFs track certain industries within the stock market. For example, if you were to buy one of these ETFs, you could be buying into an industry like technology or energy. This is more specified, but this gives you much higher returns when they're doing well and much worse losses when they're doing poorly. They are specified in one specific industry. For more risk, you can invest in this ETF. There are so many other ETFs you can invest in. If you want to see many examples of ETFs, then go to Investopedia or other finance and investing sites like that. These sites are really good to just look at the information. I get my information from this. I'm not sponsored by them. Go look at that if you want more ETF examples and if you want a better description, because they always do better descriptions than most finance YouTubers on this platform. Remember that when I say that one ETF is riskier than another, I mean that it will lose maybe 1% or 2% more, but it will lose not nearly as much as stocks would or other risky investments would. Let's go a bit further. If you're willing to invest in stocks in some way, then you can invest in an index fund such as the S&P 500. This is a fund that has the top 500 traded stocks in the US. Index funds are different from ETFs because they cannot be traded during the trading hours. Warren Buffett recommends that people who are new to the stock market invest in an index fund as it's safer than individual stocks, but you get to see the improvements and drops in prices of the stock market just like you were investing in individual stocks or one specific industry. This fund is not tied to one specific industry, which makes it safer. If one industry were to do bad 1 year or quarter, then the other stocks would make up for that loss, just like you saw in 2020. I want to talk about bonds. These are quite boring, pay you an average of 4% return each year. This investment is much safer than the stock market investments, and you don't have to worry about buying and selling or how the market is doing now and in the future. This is a pretty hands-off investment. If you want more of a passive income stream, then you can invest in bonds, but remember that you're not gaining a profit until you sell. There are many other safe investments that you could make when you're in your early years of investing. This could be things like real estate or real estate investments. I'm making a pros and cons video on real estate next, so if you want to see that video, then subscribe. Thank you guys so much for watching today's video. I really appreciate it. There are so many investments, be it in the stock market or bonds or commodities such as gold or Bitcoin. If you don't want to invest in one of those assets or investments, there's so many other investments that you could put your money into. The best things to do before you start investing and dipping your feet in the water is learning. I know I say it a lot, but it's super important. If you guys want to see me go into one type of investment specifically, then like and subscribe and comment what investment you would like to learn about, and I will definitely make that into a video. Thank you guys so much for watching today's video. It means a lot. Like and subscribe with all notifications on by hitting that bell icon, and I'll see you in the next video.